So, because of the sweeping tariffs and escalating trade wars under President Donald Trump's administration, we find ourselves at a crossroad. Monday morning stock market crashed, indices plummeted, skyrocketing volatility and fears of an impending recession. I have with me a very special guest, Professor Arun Kumar, and he's a retired JNU professor. Thank you so much for speaking with us, sir. You have a wealth of knowledge in the world of economics. So I want to know from you straightforward, do you think that it is Black Monday 2.0?
You are right. The problem of what reflecting the stock market is that we are going to go for deglobalization and protectionism. The tariffs that have been levied, they had a ring of sort of justice when Trump said that we levy as much tariff on a nation as they are levying on us. But it's not that. Like for instance, India levies average of 17%, US levies average of 3%. So perhaps 14% would have been all right. Even though, of course, in WTO, we'd agreed to these differential tariffs, but 14%, but 26%, how is it done? There's a vague formula saying that if you have a trade surplus with us of X amount, then divide by the amount of export, and that becomes your percentage. And you have that. Now, that's no formula. This is pure protectionism. The gap in the tariff between China and the US was not 54%, So this is pure protectionism. And when you go in for protectionism, question is, why are you doing that? And the reason they're doing it is because in the WTO, the US made a mistake. It agreed to a variety of concessions to the countries which were developing countries, which were technologically backward, because it was recognized that they could not compete at the same level as the advanced countries. So therefore, you agreed to differential tariffs. The advantage that the US got was in terms of TRIPS and TRIMS, the intellectual property right protection, the investment measures protection, the services protection, etc. So there's a whole gamut of things that were there. This is being completely reversed. So the way we traded, that's being reversed between America and the rest of the world. Now the danger is that if the rest of the world also start levying tariffs, then this problem of deglobalization will aggravate further. Now, if the tariffs are levied only against the USA, and the no tariffs are levied amongst the other countries, then the situation would be slightly better. But there's a danger that if China having a lot of surplus because its export to US will come down, may start exporting to other countries, then other countries will also impose tariffs. So unless China shows statespersonship, the EU shows statespersonship, we don't levy tariffs on each other, the recession is coming.
Yeah.
If we are able to manage the situation amongst ourselves, then the impact will be less.
So there is a concern of US becoming a protectionist nation and also, kind of violating whatever was promised in WTO, like the status of most favored nation for India. But apart from that, I want to know from you, do you think that India will also somehow, go ahead and become a dumping ground for Chinese goods?
No, so India will have to protect itself. I mean, already we have a $83 billion trade deficit with China because China exports to us not only high technology items, but also low technology items, right? And that's because, in manufacturing, they have stolen a march over the rest of the world. They produce things at a very low price, and therefore they outcompete even the developing world nations. But the point is that Chinese will have to show statespersonship. Otherwise, they will suffer also. So the statespersonship would be that they should not dump, they should not put tariff on other nations, and they should play fair. If they play fair, they can replace the role that the US played as the dominant world economy, because the Chinese economy would also benefit if there's a fair play amongst all the nations. So it really depends on what role the Chinese play.
Yeah. And so, Professor Kumar, do you think that the primary trigger for today's stock market crash down was only US tariffs, or there were other factors at play as well?
So, ever since President Trump, it became likely that he would win, and he was saying he would levy tariffs. So since October, there was uncertainty. The Indian stock market was going down before that also, because the Indian stock market was highly overvalued. So in a sense, everybody worried about the future. And whenever you have uncertainty, then what happens is that stock market investments come down. People move towards safety. So therefore, foreign institutional investors were retreating. They were taking money out of the Indian market, and therefore the foreign exchange reserves were also falling, and that's why the rupee was weakening. So in fact, all this was interlinked to the uncertainty that the US was creating. what President Trump was saying, that was creating an uncertainty. That uncertainty has only grown because now if he's being protectionist rather than actually levying reciprocal tariff, then the uncertainty goes up. Now we also have uncertainty because what action EU will take, we really don't know. Whether what action China will take, we really don't know. And then within the US, there are huge protests taking place. Like on Sunday, there were big protests, right? And then the corporates are also complaining that this is not the way because supply chains will get disrupted. So will that have an effect on the US president? Then also, there are other straws in the wind about, the courts taking a view about the situation. Then there's the Doge, which is cutting back on employment. As it is, the US was complaining that their good employment was low because these jobs had gone to China, India, Mexico, right? Now you're reducing the government jobs, which are the good jobs. So therefore, demand in the US economy will go down. So demand will go down because you're retrenching people, you're cutting back the fiscal deficit, and you'll have inflation. Because tariffs mean inflation. So if inflation takes place, then workers' purchasing power will go down. Therefore, the demand will come down. So there's multiple reasons why the US economy is going to go down. And with that, the other economies in the world, because the US economy is still 26% of the world GDP. So therefore, there are multiple reasons why we are headed towards a recession. Unless these policies are reversed within a month or two, because of the pressures that are coming from the public, from the corporates, from outside the US, all these pressures, if President Trump retreats, though of course he's saying he's not going to retreat. He's saying this is the liberation day, this is the best day the US has seen. We are going to celebrate this day because they turned the US economy around, etc. None of that is going to happen. What he's doing is he's not going to make America great. Recession will not make America great, but he'll create chaos in the world.
Yeah. So you rightly said that the impact of this is going to definitely trickle down to the normal US consumers as well, which will again, give a rise to the inflation. But I want to know from you, taking a cue of what you just said, it's also going to have a huge impact on FPI outflows. I mean, a lot of foreign investors are going to sell their holdings in India's financial market and are going to withdraw their money.
So, whenever there's uncertainty, people want to look for certainty. Now, earlier, the US economy used to be a certainty, and therefore people would shift to dollar, people would shift to the US. But now gold is the only certainty. Because if the US economy is headed into recession, then even the US economy is not a very safe bet. So therefore, you see that the dollar is also beginning to decline. Initially, it was the other currencies that were declining, but in the last 1 month or so, that has changed. The rupee has risen. Rupee was falling earlier, rupee has risen. Because now dollar is not that safe also. So therefore, gold is a very unproductive investment. It doesn't lead to any further production. So if the overall investment in the world economy goes down, then the whole world economy will go into a recession. Now, whether we head into a depression or not, we don't know. But certainly, it looks very likely that we are headed towards a recession. And because of that, foreign investment will be withdrawn everywhere. Also, if supply chains are disrupted, then naturally to fulfill the supplies, local investment will take place. So deglobalization will take place. De-dollarization is very likely. And President Trump had said that if the BRICS try to de-dollarize, they want to trade in other dollars, I'll put 100% levy. So that was another threat that he was putting. And he's called India the tariff king. Even though, the deficit with India is not as large as, say, with EU or with China. But, so all these things are straws in the wind, and we don't know how to read them. We don't know where he will do, because what he says in the morning and what he says in the evening may be different. So it's a very uncertain situation. He's created uncertainty, and that is the big, the problem that everybody's facing.
How do you see, sir? Do you think that Reserve Bank of India is going to respond to this crisis in order to kind of bring the stability in the market? Do you think that normal investors should expect some sort of aggressive rate cuts or any sort of policy intervention?
See, when we don't know what's going to happen in the next 24 hours or in the next 1 week, it's very hard to predict anything. So I think all policies should hold, because if you change policy, that adds further to uncertainty, because you don't know whether it's the right direction or the wrong direction, right? So therefore, hold policy and have a MPC meeting, not now, don't say anything much now, but in 20-25 days when the things are clear, have another MPC meeting and then take a view about it. Similarly, for the Government of India has to prepare fiscally, because certain sectors of the economy will be hit hard. For instance, the agriculture sector, Because if our agriculture exports go down, then the agriculture prices go down. Farmers already are poor. 85% of the farmers are less than 5 acres. They cannot cope with all these changes if their incomes go down further. If the Indian government agrees to lower the tariffs on agriculture commodities coming from the US, that also will lower the incomes of the farmers. So either way, the farmers are going to hurt. If you continue with this or you lower the tariff, the farmers will be hurt. So large percentage of the Indian population will be hurt, and therefore the demand in the Indian economy will be affected. So not only will recession in the US economy or slowdown in the world economy affect, but even within the Indian economy, there'd be a tendency for slowdown and so on. So in other words, the government needs to prepare fiscally. How will it boost demand? How will it boost incomes within the economy so that what we cannot do against the external sector, we try and manage within the internal sector?
Exactly. And just last question from my side is, as common investors who do not have any sort of strong financial background, what would be your advice in order to ensure that the potential losses that they're facing can be minimized?
So, we don't know where we are headed. We don't know whether these policies will be reversed in, say, 10 days or 20 days or the next 1.5 months. We have no idea. So we don't know which way the market will go. So there are differential things. Those who are middle class, they need to protect their savings. They should get out of the market, because we don't know where it's going. It might go down further, it might go up. But if it goes down, you lose your savings. Those who are better off, those who can hold on, they probably should hold on, so that they also don't know which way it will go. So at least maybe if it goes up, they benefit from it. So in other words, differential strategies for differential kinds of investors, depending on what is their risk assessment, how much risk can they bear. Okay, so there's no one formula which can be applied.
So we have seen a lot of dark chapters in history, some triggered by scams, some by elections, some by COVID, and this another with, triggered by Trump's tariffs. So we'll have to wait and see what if we are going to face another bloodbath in the stock market. But for now, thank you so much, Professor Kumar, for speaking with Asianet News.
Thank you. Thank you for having me.